Good afternoon, everybody. Thank you for attending our webinar on environmental insurance trends. It's great to have you here. Just a quick sort of update on what's happening for this afternoon for our webinar. Obviously, we're going to go into a few topics on environmental insurance led by my three esteemed colleagues here. We do have a Q&A session at the end. I would invite everyone to add in your questions into the chat box provided on the screen here. Please do so. I'd be happy to answer them if we do have time. As I say, we have three individuals here, a wealth of knowledge, who are going to share a lot of information. I'm going to start by saying hi, I'm Tyson Peel from Burns & Wilcox, Canada. I'm the Vice President and also Managing Director. Then in my middle of my screen here, we have Gina Jones. She is the Vice President, Director of Environmental Programs. Gina's been with us for 15 years as our Environmental and Energy Head of Practice Group. She also has 30 years of environmental underwriting, brokering, marketing, and product development. So thank you very much, Gina, for attending. Next, we have Beth. Beth Linton is our Vice President, Environmental Brokerage, ESU, which is now a new division of Burns & Wilcox. She began her career as an environmental consultant. She has spent 25 years of providing environmental underwriting, environmental brokering services. Thank you very much, Beth, for attending as well. And then from Canada, I have Kareem Jarudi. He's our manager of our Burns & Wilcox environmental team in Canada. He has 20 years of EI experience, both in Canada and also in abroad and emerging markets. So thank you very much, Kareem, for attending as well. As everyone knows, Burns & Wilcox is definitely a leader in wholesale insurance for environmental. This year was rather exciting for us. We did acquire ESU, who is led by Beth Linton this year. So it's a great amalgamation of our teams. ESU is just basically going to join up with Gina Jones in the practice group in the US. And we're really excited to expand our national footprint. The team is just excited to get your business in and be able to really push ahead, and it should be a strong area of growth for us going forward into 2024. We'll pop into our agenda here quickly. We're going to talk about the state of the market, some market challenges, emerging issues. We have some tips and then some specialty solutions here from Burns & Wilcox, which will then lead into our questions and answer period. All right, so let's dive in. Let's talk a little bit about the current state of the environmental market. Gina, do you want to lead off this conversation and start talking from your perspective?
Absolutely. Thank you, Tyson. First, I'd like to say, gosh, Beth, we are so excited to have you and your team and Environmental Underwriting Solutions a part of Burns & Wilcox, and it was such a fun moment when we teamed together. So EUS has been great to have on board. So welcome back. So yeah, let's talk a little bit about rate. And what's really important to note right now is that when casualty lines are in a hard market, right? When property and general liability are in a hard market, which y'all are seeing right now, environmental tends to be in a soft market. Insurance premiums are increasing, and then they try to figure out how they're going to reduce costs, right? And they look at their portfolios, and oftentimes it's coverage that they think that they don't need or don't have an exposure in, they cut out. So environmental tends to generally be in a soft market. What we are seeing with regards to rate is tightening terms and conditions, and it continues to point to a little bit of a hardening market with our carriers adding higher deductibles, pulling back on limits, things of that nature. We're also seeing carriers who have historically kept their premiums low. They're starting to take increases on 3 to 5% starting in 2024. So that's definitely trending a little bit differently. But capacity continues to be strong in the environmental space in the United States. Kareem will talk about Canada. So this keeps rate increases in line. We have over 60 markets, so it's very competitive out there. But in 2024, I think we can expect rates to increase slightly.
It's interesting. I liked your comment where, it's always more of a soft market in environmental, and then potentially, it is one of the first coverages to sort of drop off when people are being tight. Obviously, the financial situation is interesting right now, so that's a good thing to know. How about there in Canada and Kareem? Can you provide some comments as well for us?
Sure. Good morning and afternoon, everybody. Thank you for your time today. Canada is a story of rate instability. I think we continue to see rate erosion up here. It's a pretty heated, competitive arena. Even trending from past years when Q4 has been traditionally known as, maybe it's not a nice expression, but sort of the fire sale quarter, where underwriters are sort of focused on getting that market share for the end of the year. We're seeing that trend start much earlier. This year, we would argue that trend started halfway through the year in June, July. So that kind of puts us at odds a little bit with a product line that's so technical to underwrite. And I think for sound underwriters, the importance will have to remain on underwriting integrity first and then ensuring competitiveness, which means invariably, and we see this ourselves, having to walk away from some infeasible opportunities. To me, I've always considered that short-term pain for long-term gain, rather than putting business on the books that doesn't make sense one way or the other later on and needs to be re-underwritten. But it's definitely a factor and a primary factor in the current market space up here.
Great, thank you very much. Definitely the strong philosophy. Long-term gain, right? That's what we're here for, long-term partners with our brokerages and our markets. How about you, Beth? What's going on in your space?
Yeah, thanks, Tyson. Right now, it's true. Competition, is really fierce right now in the environmental space. And I, agree with Gina. Many segments in the environmental, market space are soft, especially with contractors' pollution liability, and with the combined, construction, professional, and the CPL combined form, we're still seeing historic and soft rates. So good news is we do have access to the most competitive markets. We have all of them, like Gina mentioned. We have relationships with up to 60 of the environmental markets. So we see it really as an opportunity. And you're right. We're seeing as our insureds maybe feel some pain on the other side. The environmental market, again, for CPL, it tends to be and still is soft. So we see it as an opportunity where maybe in the past, your insureds were reluctant to buy pollution. We do see it as an opportunity where now, they might be willing, to purchase the pollution liability coverage.
Interesting. Okay, great. Well, thank you very much for that. Let's move into some current challenges. I'm going to do reverse here. Beth, do you want to sort of start off with what you see as a challenge in your area?
Yeah, and where certain segments in the environmental space is soft, we're really seeing excess, right? That has been a challenge for us this year, where individual markets are reducing their overall capacity as a whole, right? So if and really that's a function of the underlying coverages, right? It's the underlying auto. We're seeing nuclear verdicts still. The frequency and and severity of those underlying auto, we're seeing some reduced capacities for excess. But we do have markets that are willing to step up to the plate and complete those excess towers that are needed. So we have access to all those markets. And so where in the past you might see one or two carriers fulfilling those excess limits, it may be two or three, possibly four. But we do have those market relationships where we're able to fill those excess capacity. But we kind of see that trend continuing in 2024.
Great. That's great that we have the options to be able to help our clients out.
Right.
Gina, do you have any additional challenges you want to add?
Yeah, I think this trends year after year, right? The greatest market challenge that we have, our insureds really do not think that they have an environmental exposure. They think, hey, I'm not dealing with methyl ethyl death. I don't handle chemicals. I'm not a dry cleaner. So therefore, I don't have exposure. When in fact, every single account that crosses everybody's desk, in fact, has an exposure. Anything in excess and anything outside of its natural environment is a pollutant. And people obviously don't understand that. But the reality is absence of loss does not mean absence of risk. So I think that's one of our market challenges that we have in general every day. insureds don't think they have an exposure. So we spend a lot of time educating. We spend a lot of time talking to our retail agents and our clients about what their exposures are, what their needs are, and how we can craft coverage to make sure that they're taken care of.
Great. I love that education piece, as you say, educating our clients that this coverage is required, and giving them some claims examples down the road within that education piece of what potentially could go wrong, where you never know, and that's what environmental insurance is here for.
Right.
How about in Canada, Kareem? Do you have anything to add for some challenges for us?
Yeah, definitely. There are challenges. We mirror the American marketplace in a lot of ways and trending and such. So we see some of the same things. As I mentioned before, competition is a factor. Competition is fierce. Rating continues to erode. Pricing continues to erode, and there doesn't appear to be a shortage of willing participants at those rates. So we are being pushed sometimes into an infeasible place below some people's minimum premiums or comfort levels as underwriters. To Gina's earlier point, the play then becomes to differentiate oneself, to leverage those broker relationships, to educate those brokers, to have strong trade partner relationships, and make sure that we're strategic in those relationships to be able to place meaningful coverage for our clients, and then obviously be aware of the strong competition wins that we're facing. We can't ignore those, but we also have to sort of make sure that our underwriting is sound as in the marketplace up here. On the other side of things, capacities, they're holding steady for Canada. I mean, not to be flippant about it, but underwriters are not writing what they're not writing. Canada's kind of stable in that sense right now. So as I was saying earlier, we're kind of a hybrid soft hard market. We continue to be soft on price and a bit harder on capacities. The usual high risk areas, pipelines, oil and gas, mines, landfills, there's going to be more restricted appetites around those and fewer participants. Known pre-existing conditions are going to continue to be underwritten more carefully by underwriters. Hopefully, we hope at least, even in spite of these pricing challenges. We're more likely to see capital improvement exclusions or voluntary site investigation exclusions than we would have been 5 to 10 years ago. So that's definitely, and there's an impact on capacity. Underwriting underground storage tanks over 20 years, I don't think anybody was ever sort of tripping over themselves to write those. And while we still can, and we have solutions in the marketplace via some partners, I don't think anybody's targeting those as a growth pocket by any stretch of the imagination. Again, underground tanks that are above 20 years of age. Fuel delivery continues to not be a highly desirable class, particularly residential. But again, it's not to say that solutions don't exist. But we continue to see, just to add to our prior impression of disruption that we were talking about, we'll continue to see players who have previously pursued a class of business aggressively suddenly sort of about turn and say, we're no longer writing this class of business right now. And that spills back into the marketplace. So there's definitely unpredictability, and I don't see any relaxing of capacities at this time.
Great. Okay, thank you very much for that, Kareem. That's great input. All right, let's shift gears a little bit now and talk about some new, interesting, emerging, hot button sort of environmental topics that are trending out there right now. Gina, do you want to start us off? Do you have anything there?
Sure, it's a great question, and I can tell you the three of us, we totally geek out over this stuff, right? We're total environmental nerds, and this stuff just really gets us going. We love it, so this is the stuff we love to talk about. But right now, many of us are now seeing exclusions, not only on environmental counts, but I think you're probably starting to see them on your general liability counts and probably your property risks as well. And it's the big thing that we're all talking about, which is PFAS. PFAS truly, I believe, is the next asbestos for sure. I think lawyers have gotten a hold of this and they're just running with it like they did in asbestos in the 80s. So we're definitely going to see a lot of lawsuits come out with PFAS. For those of you that don't know, PFAS is the acronym. I'm not going to attempt what it's called. I don't know, Beth or Kareem, if you've got the words, you knock yourselves out, but I'm not going to even attempt it. But it's also known as forever chemicals, and that's kind of what we call it, right? PFAS are the forever chemicals. It's a man-made chemical, and it's found in everything. I swear it's in absolutely everything, but you're going to really find it in things such as Teflon, fire retardant, things of that nature. and the EPA has linked it to human health risks, and it's bad. I mean, the things that are happening because of PFAS is bad. So while many environmental carriers are adding PFAS exclusion, they will consider taking it off. They'll underwrite to the exposure, they'll underwrite to the specific risk, but it's definitely something that you're going to see in the future, and especially on your general liability policies. Just recently it came out. I mean, we all look at this stuff because, again, we're total environmental nerds, but just recently, and it literally came out about a day or so ago, Central Wisconsin City is suing numerous manufacturers of PFAS. They're holding them responsible for widespread contamination to the city's drinking water. 15 PFAS manufacturers have been named. 61 major insurance companies are involved. They detected PFAS in the drinking water and the groundwater wells. They are targeting companies that manufactured the chemicals and used it in consumer products for decades without letting any of the public know or informing their customers of the risk or the health risks involved. The lawsuit states that people are trusted companies. They earned billions of dollars, right? They trusted them. They earned billions of dollars creating these products that are used every day in our households, and we're doing so without putting communities' health and resource at risk. So definitely stay tuned. PFAS is the next asbestos. The other thing that we're seeing, I've been watching this for quite some time. We're seeing a lot of tort filings on a chemical called, and I'm gonna butcher it because, again, it's Phtalates, P-T-H-A-L-A-T-E-S. This is the chemical that's used in hair straightening. This product has been known to cause reproductive health problems, cancer, endometriosis, a lot of reproductive health issues, and is directly related to hair straightening products. Plaintiffs are mostly of color, and this is something that we're definitely watching in regards to emerging issues. And when you talk to people that actually use this chemical, they say, well, this is happening because people aren't using it correctly. Well, they're not. If they're letting it stay on too long, they're doing whatever they need to do, but that doesn't really matter. The lawsuits are coming. So those are the two things that I'm paying attention to a lot.
Crazy.
It is crazy. It really is.
Yeah, it definitely need to be aware of that information. It's the next asbestos. We know how bad that turned out for everybody. So yeah,
right.
If you need help getting educated, here's my experts. Please talk to them about this topic as much as possible. Beth, anything else to add to that?
Yeah, I just want to, just sort of circle back around on, the PFAS. And, we are, seeing the, PFAS exclusions. Certainly in the standard carriers, we're seeing those PFAS exclusions, and our environmental, carriers, they are including the exclusion. And it really comes down to really the uncertainty. We're right. It's going to be, it's the emerging topic. We know that federal regulation is coming. They say it's going to be 2024, but exactly when it's going to be and what exactly it looks like, that's what's causing the uncertainty in the marketplace, right? So, so you're going to continue to see those PFAS exclusions. Now, for example, though, we can, and there are environmental markets that will consider the PFAS. Just for a quick example, we recently bound an account that was a city in Florida, municipality. So when we first received the quote, they had a total PFAS exclusion. So, but working with our, agent, working with the carrier, and providing the groundwater monitoring reports that the carrier could get at least a comfort level on what the groundwater monitoring reports, were indicating, they were comfortable releasing that, reducing or eliminating the PFAS exclusion, with a high deductible. So, it is available. We have those markets, but it really is, on a case-by-case basis. And, as this, emerges, we're certainly keeping an eye on it. Another pollutant, a concern is mold. We're continuing to see bodily injury and property damage, claims from mold, especially, with your insureds that are habitational risk, right? Apartments, condominiums, hotels, hospitals, commercial, office space. So we're seeing, some environmental carriers, exiting, tightening their guidelines on mold, but there are other markets that are coming, and filling that space and providing the mold coverage that you need. And, the one thing to, discuss and keep out, discuss with your insured is that we continue to have a really low occupancy rate, for these, commercial office space, right? So you may have insureds that have vacant buildings, or the occupancy rate's low, right? So they don't know, or they may not be aware that they have water intrusion, which is going to result in mold, right? So, I mean, I think that's one thing that's going to, continue, into 2024, that we're going to, it continues to be, pollutant that we keep an eye on.
Great. I know we can write PFAS back into some policies, expectations for clients if they go down that route, like lofty pricing changes or limit reductions, would you see?
Absolutely. It's going to be, yeah, on a specific basis, it's going to be, high SARs, it's going to be, higher premiums, and it's going to be on a case by case basis, and it's going to be underwritten very carefully. Yeah.
Very interesting.
Yeah.
All right, Kareem, how about Canada? I'm sure we have the same, but fire away.
Yeah, Canada, the Canadian EIL space tends to be sort of a reflection of the larger scale American environmental insurance scale. So it's not a surprise there, much as we kind of followed their lead on asbestos, and to Gina's earlier point, comparing those two, PFAS/PFOA, these forever chemicals, are probably the next asbestos, in the sense that it's the next wave of a contaminant that wasn't high on people's minds until it became a big priority. The ground is fluid. The ground is changing beneath our feet. From the time we booked this presentation till today, I've seen changes in the marketplace, where in the beginning we were among those who tracked PFAS, PFOA a lot and talked to a lot of our trade partners and trusted collaborators, and we were starting to hear things like, this stuff is literally everywhere. How can you ever, put a cap on it or underwrite to it? So we thought maybe it's going to go a different way. And then we started to see certain contractors come up with very specialized ways of dealing with these forever chemicals. Again, these chemicals are in anything from a pizza box to a winter coat to suppression fluids. So it's in a lot of our daily lives for the past decades. But now I think as regulators and as contracts catch up to this discussion, the earlier days, the earlier lackadaisical days of talking about this have probably gone. Just in the last couple of weeks, we've started to see mandatory exclusions on site policies or site policies with a GL component most recently. So we don't think that this is something that's going to go away. And in fact, it's going to be a concern that amplifies with time, again, as our regulators catch up to the conversation, and then contractual obligations in whatever form between tenant and landlord, or between bank and lessee, or what have you. That's usually where these new requirements start to filter through as part of requirements, and then they become an issue. So if US trending is an indication, benchmarking against our historical waves and trends, for example, asbestos, and how a couple of decades later we kind of caught up to the curve, we do expect forever chemicals, quote unquote, to become increasingly relevant. Again, once our regulators and once our contracts continue to catch up. Other factors that are of concern, Beth talked about mold. Mold remains a topic of conversation in Canada. It's particularly of concern to real estate clients. It's still a driver of business, and it's still a driver of claims. Asbestos remains a topic of conversation for our abatement contractors that are specializing now in the removal of this stuff, but they'd like some measure of cover and comfort from us to be able to do their jobs more comfortably. And let's not pretend it's all just out of self-comfort. They're also being mandated by the regulator of the day to carry certain coverage before that they can step on these sites. So these are all very much conversations that are real and happening in real time up in Canada. We keep an eye on the market. We follow trends, and we see how that how that translates into coverage or lack thereof. We've seen, as I just described, both coverage and lack thereof for forever chemicals in the past year, where we found a way to write some contractors who are going after it. And we've also seen that some of our carrier partners would like to start implementing exclusions on sites. So to be continued, but we're definitely keeping an eye out.
Great. Thank you very much, Kareem. Always love the trends that we see, obviously coming up from regulators or claims in different situations. So I'm glad you guys are on top of it and be able to provide this information for our agents and brokers who are listening. And obviously, I know you guys are communicating with our market partners to make sure we have the best product available. So that's great. Let's move into some tips and tricks that you guys might have to be able to improve the sale of environmental insurance, help our brokers get quotes faster. Does anyone have anything they want to sort of start off with here?
Sure. I'll start. You know, the industry continues to evolve, right? With global and economic trends. It's really important that building and maintaining strong relationships with carriers, it's critical, right? It's critical for brokers. It's critical for agents. It's critical to ensure access to available coverage for our clients, right? So that's definitely something that we think is really important. Quality submissions that answer all the required questions, that's so important, while providing any additional profile details. They're advantageous creativity in identifying available solutions, selling based on coverage rather than price. Partnering with experts. That's probably the biggest tip. And the biggest thing I can say is partner with experts. They'll get you to the right carrier, they'll get you the right coverage. And I think that's, I don't think that's rocket science, right? I think it's in everything we do.
That's definitely what we're known for here at Burns & Wilcox is our expertise, not just environmental, but multiple lines as well. So great tip for sure. Any other tips for our brokers? Beth, Kareem, you want to join in?
Yeah, and I'll just say that, you know, too, I mean, I really think that, you know, it's like we said that we kind of geek out with the stuff because, you know, this is our background. This is what we've done. It's environmental. It's always been, you know, our collective environmental net, you know, environmental is our niche. And so in having that expertise and, you know, being able to communicate with your carriers and having those relationships, I think is the most important.
It is.
Yeah.
Awesome. Kareem, anything else, or I think we covered good?
No, I'll jump in. Much like everybody before me just said, you know, our strategy to combat a lot of these market trends and coming, you know, oncoming new items to be cognizant of and market challenges and competition, all that is to do what we do basically across the board in Burns & Wilcox is to strategically position ourselves, is to try to be holistic providers. So we'd like to think of ourselves on the Canadian team as more of a holistic solution for our brokers, and that we can, you know, address their needs on SME business, the competitive low complexity segment, as well as competing and winning on the larger, more complex business. And we achieve this with relationships with our key brokers, because we are not trying to be all things to all people. We are not 17 or 20 underwriters. I wish we were, but we're not. And, you know, and we're not trying to be partners to 17 or 20 or 25 underwriters either in Canada. The scale is different, obviously, in the US. So we're just strategic in who we speak to and the capacity and the support that we get from them. And it allows us to play this sort of hybrid role that's maybe not always prevalent as a solution in the MGA space, which is to be, again, as happy and as comfortable with the smaller, low complexity stuff as we would be on the more complex and more sort of the larger solutions.
Great. No, I like that. Okay, so we had some tips there. What can we do at Burns & Wilcox for some solutions for our clients? Do you guys have any products that you want to highlight that could help potentially solve some of these issues? Dive in there first, Beth.
Right. So, you know, I really think that, you know, as far as, you know, solutions, you know, we have the relationships with the carriers that can provide, you know, the multifaceted, you know, coverages that are needed. Certain carriers, you know, are best at, you know, certain coverages, others are better at others, right? But identifying those and having those relationships and be able to, you know, access those markets, you know, we're able to do that. because, we're in tune and we have access with all those markets. So I think that's, just kind of invaluable, for our agents.
Right, it is, and I'll jump in on that. I think that partnering with experts, right? For instance, some carriers won't provide coverage for causation of mold, right? And if you've got a plumber and you're looking for contractor's pollution liability, those are not going to be the best carriers to go to. So it's important to make sure that you understand what the carrier's appetite is and what they're willing to do. So for a plumber, for instance, you're going to go to the carriers that are going to give causation of mold. So to Beth's point, I mean, the carrier relationships and understanding what their appetite is and knowing what they're willing to do and what they're willing to give. That's definitely important. And I think with regards to, what we can do as a group, sky's the limit, right? I mean, environmental is ever evolving. When I first started in this arena a lot of years ago, you had to have, in order for us to package a GL, CPL, PL policy, you had to have 50% of it truly environmentally driven, right? Now we're seeing carriers go down to 10%. So we can get very, very creative. Contact us, we'll see what we can do. We might be able to wrap in other coverages for you. And we can write auto in a lot of instances. We can write work comp with it as long as we write the casualty piece. So it's not just environmental. While that's the driving factor, it's always better to package it if you can. If you can package GL and PL with your CPL, it's better. You take out gray area, you take out finger pointing, you take out the GL carrier saying it's pollution and the pollution carrier saying it's casualty. So that's kind of what we offer, is the expertise and the knowledge of what carriers can do and how we can package it. And it goes with site pollution as well. In a lot of instances, we can package it in the general liability for different accounts. And if it's a manufacturer, we can do products pollution and, transportation and nods and you name it. So we know the carriers, we know their appetite, we know what they're willing to do. So that's kind of what this group here offers.
That's great. Your comment there about packaging the policy in that gray area. Obviously claims, this is what we do. We pay out claims for these incidences. So, if something happens and the dispute that comes back and forth takes time. And if we can get rid of that dispute to say, yep, our policy is covering X across the board, doesn't matter if it's GL, environmental, or site, whatever it would be, that's an amazing point. Kareem, do you have anything from the Canadian perspective?
Yeah, thank you, Tyson. I started to answer that in the last section, but then decided to hold back. I mean, how do we differentiate ourselves? How do we offer specialty solutions for our clients via our brokers? I talked about it a little bit before. First of all, with our expertise, we are actual underwriters by trade. We're not just packaging these submissions and sending them to other people without we ourselves evaluating them and evaluating their fit into our collective book. So we offer our trade partners, our brokers and our clients the expertise of knowing what it is we're dealing with, and someone like me or my colleagues on the panel who've been doing this probably since very close to the beginning without aging anybody. I'll talk for myself. We also do it by offering a full range of products. So others might be focused on one product or two. The usual up here might be CPL and some storage tanks. Well, we do CPL and storage tanks and premises and package products, as Gino is saying, where you can package CPL and or E&O and or CGL if the client makes sense and they're a good fit for such product. So we ourselves are well entrenched in the lingo and the product lines. We have those conversations with very sort of rarefied stakeholders whose strategy we share, and then we're able to offer those solutions to our clients via our brokers. So I would argue that we're able to, in Canada, offer most of, not all, let's be realistic, but most of a full spectrum of environmental products.
Great. Okay, thank you very much, Kareem. Okay, guys, well, that was fantastic. Thank you for all that information that's provided. It's mostly beneficial, 100% beneficial. It's great to hear from you guys talking about the emerging topics and trends. I think that was a very key segment in this webinar, as well as the information of what's happening in the marketplace right now. So thank you very much for all your information. We're going to get into some questions and Q&A sort of period right now. Feel free to send in your chats into the chat, some Q&As, and post it across, no problem. I'm going to sort of kick the ball off the start here to get the questions going. The very beginning, very close to the beginning, Gina, you mentioned that every account has an environmental exposure. Could you possibly give some examples that people might not think along those lines, and where, why we should get this coverage?
Claims examples are always the best way, right? That's the best way to talk about making people understand where they have the exposures. And this example I have talked about for 30 years. We all know about this one, and probably a lot of you on the line know about it as well. And it's the milk claim. And I was at AIG when it happened. I know about it firsthand. But you had a truck going across the road hauling milk, right? Milk does a body good. We all love milk. We drink milk, no problems. Well, this particular vehicle capsized. Milk went into a local stream, killed all the fish, killed all of the the plant life around it. And the solution to pollution is dilution, right? We love our little acronym. Solution to pollution is dilution. So there it is. It's in the stream. It goes down. We think we're fine. We move on. There's not a lot we have to do until the EPA gets involved, and they brought in the local college, who then got all the fish that were dead, and they took those fish and they categorized them by type of fish and age of fish and sex of fish and that whole thing. And they looked at all the plant life, and they handed us a nice big bill to reintroduce all of that fish life, all of the natural resource damages, clean that all up. And that was well over $1 million. So when we talk about anything outside of its natural environment and anything in excess, I think that's the best example we can give, right? The milk loss. In addition, just another one, right? We had a guy who was painting an interior of a nursing home, just the entryway, just painting away. Well, he didn't ventilate it properly. And those paint fumes went through the HVAC system, and all the little old people got sick, and we had to take them to the hospital. And this was a little $100,000 contractor, right? This would have totally put this guy out of business. And you have to think about air quality. That is also a pollutant. So we paid for all of that bodily injury for all of the residents of the nursing home. And again, had he not had contractor's pollution liability in place, he would have been put out of business. So something as innocuous as what you think is paint, and he didn't ventilate it properly. So when we talk about anything having an exposure, they do. And we love talking about it, and we have claims examples for every single thing or every single client you have. Give us a call. We'll go over it with you, because again, we've been doing this for a long time. So yeah.
Crazy. You never would have think milk would cause such an issue at the end of the day.
Milk does a body good. Fish don't like it.
Milk is just, wow. If we drink it every day, no one would think it would kill fish or kill plant life, but you say in excess, wow, just crazy. You sort of had some comments there about the general contractors, and maybe Kareem, you can jump in on this section as well. Obviously regulators and governmental agencies are requesting that people have this coverage. And I just do general stuff like, why should I get it? It kind of leads into the same kind of conversation with Gina. But Kareem, do you have any points that you want to maybe talk about?
Yeah, sure. I was thinking a lot about my conversations with brokers as Gina was talking. Gina and I both come from AIG, and we have our own lingo. For example, absence of loss does not mean absence of risk. These are the things that we've been kind of trying to impart for the decades we've been doing this. And we get that pushback a lot up here in Canada. We get a lot of times broker calling us and saying, hey, the CCDC or the BDC or a lead contractor is making my contractor get this coverage, although they have zero exposure and they're really annoyed. So I need you to give me a policy for $2 and make it really quick, or else. And we have to kind of slow them down and say, well, first of all, it is very wise on the part of those stakeholders to ask for that coverage. Again, the fact that your client hasn't had a loss so far doesn't mean they don't have an exposure. And then we have to kind of have the slower conversation and educational conversation. In our humble view, almost any contractor will have an environmental exposure just by virtue of setting foot on another company's site and premises. Even if they don't bring chemicals, even if they don't deal in chemicals. What if they back up a truck and hit a tank that's full of chemicals? There's your environmental exposure. That's going to require remediation via IMPD. What if that loss is gradual instead of SNA? Your GLs might not respond to that. Similarly, we feel that virtually every site, every premise would have some kind of environmental exposure. Again, it's not us upselling. It really is true once you think of it from the sense that, irrespective of what the client is doing on that premise. Two questions. What was being done on that premise before, going well back in time? Do we know? Do we know if there was any more harmful activities that were done on the site? Because as far as I know, in most of Canada, it's no longer polluter pays. It's basically you own the premise, you own the problem, even if it is 3 owners ago and for 30, 40 years ago. Let's say all that is clear and perfect. Okay, well, what is upstream from you? Who is around you in your neighborhood? Whose activities may impact you via groundwater or via air emissions, even if you have the most innocuous operations on your site. So this is a conversation that we always have. We want our brokers to understand themselves and impart that back to say, I wouldn't be underwriting this with you, giving you a quote if I actually believe that your client has zero exposure and just someone putting a gun to their head to buy it. That's not actually correct. That's not actually true. That's why I'm on the phone with you, talking to you about what their exposures might be and why this coverage is important for them.
Interesting. Thank you very much, Karim. That was great. I do have a quick question along that. So if you're buying, a contractor's buying policies, so would you do a project specific or an annual? Is there any better differences, or can you maybe sort of just talk about that?
For us?
For anyone, join in.
Yeah, I was just about to say, obviously for the U.S. I mean, and that's, what we're talking about, that, every contractor, every general contractor, every trade contractor has a pollution exposure, right? And so, oftentimes, they don't understand that they have that exposure, and, we, work with our agents to try and educate their insureds to know that they do. They've got an exposure, like you said, once they step foot, on a job site. So a lot of times, yes, we, obviously we write project specific, pollution policies all the time. But, again, with the competitive rates right now, if you can educate your insureds that, hey, look, you can get a standalone, CPL pollution, practice policy that covers your entire exposures without having to do multiple project specific policies, that's what we try, and educate, and help our, agents, communicate with their insureds.
Great, that's fantastic.
Yeah, and I think that's a conversation that doesn't happen frequently enough. I feel we end up, those of us who are sort of more entrenched in the space, have that conversation with our brokers. You'll see a case where a client, every time a project of theirs requires environmental, they will run to the phone, I need this project, I need this coverage in 2 seconds for this project. It's a tiny little project, otherwise I can't set foot on the site. So those clients we educate, we say, if you have 2 or 3 of these projects a year, you are better off buying an annual policy that picks up all of this work. First of all, from a scale perspective, your premium will be lower. Second of all, you've now taken away that gap of getting the policy on time to win the contract or not. But we do believe in project specific, and we offer that. Obviously, we believe in them in certain cases where they're very useful. For example, a development project that needs its own insurance geared to it and geared to that term of the project. Yeah, then it's, I think, of great value to place a project specific policy for that type of client.
Great. Okay, guys. Well, thank you very much for all your input today, guys. We're just about out of time. So I really appreciate my panelists, Karim, Gina, Beth. Thank you very much for your input. I really appreciate you guys taking time out of your busy day and month and week to sort of give our brokers and agents some required information. This is great. So thank you very much for everyone for attending. It was fantastic to be here today, and hopefully everyone got as much out of it as I did. So thanks so much and have a great day, everybody. Bye-bye.
Bye.
Bye-bye.
Happy holidays, everyone.
Everyone.
Bye-bye.